So, welcome to Coffee with Marcus and Mark, the number one stock market show on Spotify and one of the most popular market updates on YouTube. So, in this show, we are going to talk to you about what's happening in the markets and how we are trading it. Today is Tuesday, May 2nd, and stocks are lower. Yesterday, JPMorgan took over First Republic Bank, and tomorrow is the big Fed decision. Traders are waiting for this, but then just a few minutes before the show, breaking news, and the markets are reacting to this. So we'll talk about this and also how our positions are doing with this breaking news. Okay, before we get there, if this is your first time here, I'm Markus Heitkoetter. This super smart guy over there is my head coach, Mark Hodgson. We are real traders who trade live accounts. So therefore, we got a lot of trading experience. We're showing you how we trade these crazy markets. So trust me, we know our stuff and we're not afraid to tell you like it is. So if you're here looking for some honest insights into the fascinating world of trading, you are in the right place. And I mean, we got to switch over. I'm almost tempted to switch over to a 5 minute chart first, Mark. What do you think?
Let's do it.
Let's do it. So 5 minute chart of the S&P 500. Yesterday, let's actually just look back at yesterday first. A pretty uneventful day, right? Not much
Yeah.
going on.
Yep. I mean, yesterday we closed just slightly lower. You saw that the S&P attempted to make a couple of moves higher, but just came right back to the open and then closed a couple of ticks lower. So very uneventful day.
Yeah. And this is how it started today because, stocks opened lower, but then we're just drifting sideways, kind of waiting for the Joel's jobs report that's released at 10 o'clock. So let's jump over there and talk about the Joel's jobs report that came out.
Sure. So Jolt's Jobs is really a report that was created after the financial crisis, 2008, something that the Fed does look at. It's the job openings and labor turnover survey. And so openings came in at 9.59 million, which was the lowest since April 2021 and lower than the 9.74 million that was expected. So lower, but honestly, not that big of a deal, in my opinion.
No, and that's kind of what the Fed wants. They want a softer labor market, right? I mean, this will help with inflation, but this is not what moved the markets. But hey,
No, no.
before
And that's the thing.
did
Like,
move, that did move the markets. Yeah,
it seemed like things were falling just a little bit at 10 a.m. Eastern time. Job openings falling is good for inflation because it helps with wage increases, or wage increases won't lead to inflation. Anyway,
yeah.
banks. Let's get
And
to
then,
banks.
boom, the bottom fell out of the market. And what is it today? It is another bank in the crosshairs, PacWest Bank Corporation. Right now, halted because of volatility. So it's currently not trading. As you can see, down 36%. So after Silicon Valley Bank failed, after Signature Bank failed, after this weekend we had another bank failing, FRC, First Republic Bank, the second largest bank failure. And yesterday they were taken over by JP Morgan. And then today, PacWest seems to be the next one. And that's it's kind of surprising because Jamie told us yesterday we're okay.
And it looks like there are actually two banks, Marcus, that right now are kind of in the crosshairs. Now, PACW down 36% here. There were some concerns, and this whole banking crisis is really because of two things, right? One, it's the Fed and their rate hikes to combat inflation, and loans and deposits that were made that were getting just such low returns and interest rates prior to these hikes. And so, on one hand, right, if you're at a bank and you're offering the lowest rates for mortgages and everything else, you're attracting customers. But then if you're offering a point, 0.25% return on any savings accounts, when other banks start to offer 2, 3, 4%, and you have these high yield savings accounts, and the banks are locked in at these lower rates, then you have outflows, right? So you're going to have gradual outflows to go to these high yield savings accounts, and there's going to be that reason for people to pull money. But then there's also been this worry of bank failure. So you have these large accounts being withdrawn out of concern that some of these small banks might fail. And that's what's happening, right? PacWest, they actually saw deposits down 20% in the first quarter, and has put them in the spotlight for a possible bank failure. They had a trading halt with a 20% drop, and now it's almost double that. Marcus, the other one is Western Alliance, WAL.
Oh, really? Okay, I didn't see about
Yeah.
those. Okay, down 20%. Yeah, okay, okay.
So they also, it's my understanding that they were halted. And you look at that 21, 22% drop. So maybe, the worries here are behind PacWest. PacWest might be the next one that's really going to be in the spotlight. But Western Alliance is going to be right behind them. So we'll see. But it seems like we're not out of the woods yet on these bank concerns.
Yeah, and I mean, yesterday, JPMorgan CEO Jamie Dimon basically said, "Take all a deep breath. Now we have this part of the crisis behind us." Well, he has been proven wrong today, and that's what's spooking the markets. Because other than this, we also saw that this morning with the VIX, we were coming in today with the VIX being well below 17, but now look at this: the fear index up 20%, scratching 20 right now. I mean, this is just a huge jump, because now the question is, okay, what will the Fed do? They are meeting right now. They will announce tomorrow what's happening. So we only have a day and 2 hours. And this morning, it almost seemed that, okay, a 0.25% hike is certain tomorrow. So I haven't refreshed it yet. Do you think that this has changed with the bank failures playing in? Because you just mentioned it. I mean, the Fed raising interest rates, it's kind of hurting banks. You think it would be good for them, but this will be tomorrow, the 10th rate hike. So this means that they have been hiking rates by what, 5%, 4.75 to 5%?
Yep. Yep. And so the question is, would the Fed put their inflation fight on hold for banks? I don't. I believe that the numbers are going to change a little bit, but I think that the Fed is committed to raising another quarter point. I think
Yeah.
that's their target. That's what's expected. I still think traders are pricing that in, and that also I think is without any major change in the next couple of months. I think that this will be the end for the Fed, and it will be scaling back on rates after this.
All right, so I just refreshed and it dropped 10 percentage points. Right now, traders are factoring an 86% probability of raising rates and 13.5% probability of it staying the same. And again, this morning, completely different story. So these breaking news right now that two other banks could be failing here, definitely having an impact on the markets here right now and also on the Fed. But yeah, let's see what Jerome Powell has today. Tomorrow has to say today. Tomorrow, that's when we have first of all at 2 o'clock Eastern time, the federal Fed funds rates and the statement that's being released, followed by the press conference 30 minutes later. The press conference, Mark, that is always the wild card. That's what's moving the markets.
Absolutely. And, Marcus, you said it before. You really have three reactions to the Fed and their meetings here. One is the statement, right? The quarter point is priced into the market right now. Like that's what everybody expects.
Yeah.
So there's no way the Fed's going to raise by more than a quarter point, and even a no hike is going to be a huge surprise. So that's priced in. But the statement, the wording, that's where there could be something that gets traders excited. And then that press conference, that Q&A with Powell, that's where it gets a little dicey, and his response and how he reacts to the press conference. That's what traders are really looking for. And then the third reaction comes the next day, right
Yeah,
after the dust has settled, after we know what the Fed has said and what their decision and the statement. What's the follow through?
right. So, I mean, let's take a look at our positions. And with the markets being down, there are some opportunities for the wheel trade today. But let's first still take a look at what's happening here for us. So, CTRA today down 5%. That's a big drop. And this is mainly because crude oil and natural gas are both falling today. Look at the 5 minute chart here. I mean, crude oil down 4.5%, natural gas down 4%. If you're looking at a daily chart, especially for crude oil, I mean, we are back marching towards $70 a barrel. And this just comes after last week. We had, what was it, Exxon or Chevron reporting record profits?
Exxon, yeah.
Exxon.
And Marcus, there's some other information here too, because you're absolutely right with the overall energy decline. And it's interesting because CTRA, it's my understanding they kind of have their hands in both natural gas and crude oil. Technically, it would be more of an energy, or sorry, natural gas play,
Yeah.
but CTRA's correlation with crude oil is very, very high. So it tends to move with crude oil. But here, there was news that they made an announcement that they expect earnings to decline. So they haven't reported earnings yet. Earnings come out on Thursday, but it seems like they made a little bit of a pre-announcement there. So that's also impacting prices.
All right. So I have sold the 26 calls, so I might be able to buy them back and get some more premium. Right now, my break even is at 22.99, so we're still trading nicely above my break even. But yeah, not very happy with this slide. I mean, it was great to see CTRA trading all the way up here, now coming towards the middle of this range, potentially moving towards the lower part of the range with worse than expected earnings. But often this is where they want to get it out of the way today so that when announced it on Thursday, the traders are not panicking. So we will see. There might be a little bit more follow through to the downside. So it seems that I'll be in this trade for a little bit longer.
Just a little bit. Just a
Yeah.
little bit.
DHR, this is a trade that we entered last week where we both got assigned. I at 240, you at 237.50. We both sold calls yesterday against our existing position, and this is looking good. I mean, for me, I might or might not get called away depending on what DHR does, but they're hanging in there. I mean, today just down 1%, with the markets falling right now 1.5% and more. That's not bad. They're hanging in there. So let's see what happens here at the end of the week if we are getting called away and then this was a quick 1 week trade, or if there's another trade where we might be in for a few more weeks.
Yeah, I think DHR is looking real good though. Nice rebound from earnings and breaking support, but snapping right back up to those prior support levels. I think DHR is looking good.
Yeah. All right, Google. The Google's also down today with the overall market, down 2.5%. This is pretty much in line with the markets. Google always a little bit amplified in the Nasdaq. So we were trading close to the 108. I was looking and selling 109 calls yesterday. We were talking about this. Haven't been able to do so. If I had, there would be some nice profits in today. But we're right back here between the 100 and 108 level. Right now, my break even is at 198. So I'm still okay on this one. But I hope that maybe with the reaction to the Fed tomorrow, Google can move higher. We'll see.
Yeah, still in a range. Still in a
In a
decent
range.
range.
All right, PNC Financial Services. I mean, of course, right now, PNC is being dragged into this nervousness about the banking sector. If you look, before we go there, if you look at the heat map, we'll see that the heat map right now just turned bright red, and especially down here where we have the financial services in the lower left corner, we see that Berkshire Hathaway down 1.7%, Visa down 2.6%, MasterCard down 2%. And then if you look at the regional banks, this is where we see it gets really ugly. US Bank Corp down 6%. And then, as you said, Zion also down 20%. And PacWest, we just had it Let me see if I can find it on there. But yeah, this is still moving lower. So the banking sector dragging the markets down today because the question is, we thought it was over after the collapse of Signature Bank and Silicon Valley, but then FRC followed, and now one or maybe two other banks.
And this is where we'll have to see where the dust settles, Marcus. PNC down 3%. Not what I want to have happen, right? But we're still in a range with PNC, right? We're testing this lower range. I think that PNC, since the original news and slide, has been pretty resilient, trading in a nice range. There were some rumors that PNC might have an opportunity to take over the First Republic assets, and I think that lifted PNC. But then we know that JPMorgan was the winner there. JPMorgan just getting bigger. They already had 10% of U.S. deposits, and taking over First Republic just made it even better for them. So I think a little fallout yesterday because of that decision, but still in this lower part of the range. We'll see if we could break through support here or not. Down 3% on a bad bank day.
Yeah, we know
I
that
think it's
PNC has been interested in taking over some of the failing banks. And since JP Morgan just took over a bank, maybe that is here right now, PNC's opportunity to maybe scoop up one of their competitors because
hey,
they
good.
have been bidding in this auction, and that would definitely help the stock.
Yeah, because I mean the market cap for PNC is 47 billion, and now PacWest their market cap is less than a billion. So maybe this is one that they could scoop up.
Yeah. So we see that PacWest still falling now, down 36%. I mean, it has been a little bit more, almost 40%. And with that, the markets are still falling. Kind of the markets are still in free fall. The Dow now down 1.5%, the S&P down 1.6%, the Nasdaq down 1.4%, and the VIX up 20%. It seems that there's a quick pause here right now since we started talking. But
Yeah.
I mean, this definitely some breaking news while traders were waiting of what the Fed will do and what Powell will say. Something that moved the markets today because we were off to another quiet start, and that's definitely a developing story.
Yeah, gold back above 2,000 an ounce, making some highs here with a little bit of a flight to safety.
Yeah, wow, look at this. Let's see how the cryptocurrencies are doing. Same here. Cryptocurrencies up. If you look at a 5 minute chart, Bitcoin up 1.5% right now. Trying to get back up to the 30,000 level. I mean, Bitcoin now trading in the range between 27,000 and I want to say 30,000 here, but also making a move here today.
Yeah, this is crypto's moment. We'll see.
All right. So as you can see, there's a lot going on, and you don't want to miss what's happening and how our positions are doing here. So if you liked what we covered today, click on like. If you're new to the channel, consider subscribing because this way you get notified when we come back and show you exactly of what's happening, what we are trading, and what the markets are doing. All right. We'll see you tomorrow.
Take care, everybody. Happy trading.